I'm Nira Berry, motivational speaker, happiness coach, and your host of Happy and Healthy, where we explore and discover all the many ways of keeping you feeling happy and healthy. And remember to watch my Good to Know segment, where at the end of each show, I share with you something that's really good to know. And today we're going to explore the world of finances so we can better understand what to do and have a better night's sleep and less stress. So please welcome my guest, Jeff Smith, financial advisor and owner of Brightline Financial. So welcome, Jeff. Thank you for being here.
Well, thank you, Nira. I'm happy to be here.
So many people I know are worried over their finances these days. Financial worries and stress are real and affect people in many different ways. So I really want to see how we can help them reduce their stress. So first of all, can we just start with like maybe just sharing some of the basics that we should understand?
Sure. The world of finance is, to be completely frank, ridiculously complicated. And I think industry professionals, my peers in my industry, really spend a long time making sure that consumers are confused by the financial markets. I mean, just think about the advertising that you see on TV as an example. I was online today because obviously we've all been online a lot for all sorts of reasons. And I saw an ad recently. It's a Fidelity. It's a very well known brand. They're very big in the retirement space, and their entire ad is this green arrow moving people forward through their life, and they use the word forward like 6 or 7 times. And in that process, they're putting jargon in like equity and bond and retirement and 401k. And honestly, although these are all true, important financial terms and financial aspects, they don't necessarily translate to everyday Americans and what is that we're going through, all of us, as we deal with the situation around us with a pandemic, or even our typical job activities or family activities and budgeting. So, there's a lot of reasons why I think this stress is created. Number one, if we start talking about couples, for example, because I think it's one of the leading factors of unhappy marriages is actually financial differences between spouses. And
Sure.
and the,
Yeah.
and the reality is we don't communicate the same way. Some people feel very differently about credit card debt. Someone might be very comfortable carrying a little bit of credit card debt, while somebody else might actually feel like if they don't pay their bill every single month for the complete amount, that the entire world is not going to work the next day. And so part of the stress and anxiety, I think, comes from how we communicate to others, what we hear from industry professionals, or even just see on TV about what's really important. One of the things that I've tried to do for years with our clients, and I've been doing this for 18 years now. Actually, I just passed my 18th year anniversary in this industry. But one of the things that I've been doing with my clients for all this time is really just sitting down and listening to what their concerns are and what their worries are. And we know those worries. I'll give you a few examples, right? One of my clients, we'll call him John. He's 63 years old. He's been working in the government for most of his career. He's got over 30 years. He has a federal pension. And the truth is here in Montgomery County, this might sound like a lot of you who are watching this. Maybe you have a pension through the government. Maybe you have a pension through Montgomery County, the state of Maryland. And he's wondering, can I actually retire? I've worked my whole career. I've done everything I'm supposed to do. Can I actually stop working? Because there's a lot of fears about this. What if I run out of money? What
Yeah.
if I'm
That's
85
really
years old and I don't have any money? That's a big fear, right? Absolutely. Another fear might be, what if I need care when I get older and I can't afford it? And then, I mean, this term I hear all the time from people, what if I'm a burden to my children? Because nobody wants to be a burden to their children, right? And then, in his case, in specific, what we can do is we can look at his pension and we can say, here's what your pension is going to provide you each year. Then we can look at his Social Security. And let me pause for 1 second, if I can, on Social Security and try and help people understand something really important. If we listen to the press talk about Social Security, we're going to hear a lot of worries and concerns. It's bankrupt. It's running out of money. You can't count on it. Well, I've been doing this for a very long time, and the statistics don't bear that out. Everyone watching the show should know that your Social Security will be here for you when you're ready to use it. Now, it's complicated, right? These things are the elements that create stress for our clients and for most people. So, in John's case, Understanding and getting visibility to the pension, to the Social Security, to his income, to his expenses reduces that stress, helps him understand, okay, I can stop working on this day.
Yeah, there's so much stress involved, and we do hear so many different things in the media and in the newspapers everywhere that, oh, this is going to stop, or we don't have enough for this, bankrupt the Social Security, and I know that this is worrisome to a lot of people, and young people don't know, like, should they bother putting their money into all that? It's just very confusing.
Yeah,
So, I want to just ask you, like, what are some of the obstacles that many people incur in their life that you've seen, and like, like that maybe make it difficult for them to save money?
sure, sure. It's interesting because there's a real difference between somebody who, for example, might be a high school graduate, they're 28 years old, they never did make it through college. Maybe they have some college debt that they're carrying a little bit because they didn't quite finish and they still were paying it off. They're working a job, not necessarily a career, and they don't really have a lot of direction as to where they're going because they're still young, right? And so there's a lot of reasons to spend money on lots of things. We all carry a cell phone around us and they all have apps, and every one of them is pinging us ready to spend the next little bit of money on something. But where are the pings that tell you that you should pay yourself first? Where are the pings that say setting aside a little bit of money every week because tomorrow I probably will need it more is something that I wish everybody could understand. There's an interesting basic element that comes in the world of savings, and I would describe it this way, Nira. You can think of it like this: you imagine a person, maybe Julie, she's 35 years old, okay, and she's working her job, and she has a retirement plan through work. Again, for ridiculous reasons, we'll call it a 401k or a 403b or a SEP IRA. Ironically, these are all IRS codes. They're IRS regulation numbers. Why we use those to describe things, I wish we could change. But
I never knew that.
yeah, but for argument's sake, we'll call it a 401k. And she has the opportunity to save. Now, in Julie's case, she can save as little or as much as she wants up to the federal limit, which is, right around, $19,000 a year, 19,500. But how much should she save? Should she save 100 or 200 to pay? What can she afford to save? These are really hard questions for people to ask. But in truth, whatever number she saves is a great place to start. And there is no number that's too small. $10 a pay is fine as long as, and this is the most important part, as long as every year she puts in a little bit more. I've told my clients for years, every year on your birthday, give yourself a present. Put a little bit more money away, right? So that you can use it tomorrow. Because here's another truism in our world. And again, having done this for decades, I know this, and I don't think anybody would disagree with me. You want the money more tomorrow than you do today. You think you want it more today until tomorrow comes. And then, boy, you really wish you had it. So there's a really great lesson that we learned actually from a Nobel laureate. His name's Robert Thaler. He's a Nobel laureate economist. He won the Nobel Prize a few years ago. And he studies economics and he studies behavior. It's called behavioral economics. And he said if every employee could just save a certain percentage of their pay, call it 1% or 2%, there really is no right number. But then every year, increase that percentage by 1 percentage point. So if you're saving 2% when you're 33, when you're 34, save 3%. When you're 35, save 4%. If you just did that, many of those retirement fears and worries would all go away by the time you hit the ripe old age of 67 or 70 when you're ready to retire.
Wow. So it's really, it's a mindset from what I'm understanding from what you're saying, that any difficulties that we may have in trying to save money, that if we put our mind to doing it, uh,
Hmm.
and maybe sacrifice a little bit,
Hmm.
that we can do that.
Yeah, there's a really interesting study that was done at Stanford University, decades ago, call it in the 60s and 70s. Many people might have heard of it. It's called colloquially the Stanford Marshmallow Experiment. And basically, in simple terms, and I'll describe this, it doesn't take long to get the basic concept. They took young children, we'll call them 6 or 7 years old, and they put them in a room and they said, I will give you one marshmallow. I'm going to walk out of the room and you can eat that marshmallow. It's yours. Okay. I'm going to come back in 5 minutes. This is what they would tell them. And in 5 minutes or 10 minutes or 15 minutes, they did different numbers. I'm going to give you a second marshmallow, but only if you haven't eaten anything of the first. In fact, you can't even touch the first marshmallow. If you touch the first marshmallow, you don't get a second one. But if you don't touch it, in 10 or 15 minutes, when I come back, you'll get a second marshmallow. That's the entire experiment. And then they broke the kids up into groups of those who chose to eat the marshmallow and those who chose to wait to eat the marshmallow. Now, that's not so interesting. What's interesting is they've been tracking those same people for the last 45 years. Okay, so they know those who ate the marshmallow and those who didn't. And here's one of the things that they've learned. Those children that chose to not eat the marshmallow and wait 10 or 15 minutes, they have higher SAT scores, they have higher incomes, they rate higher in life satisfaction studies about their own happiness. And it has a lot to do with delayed gratification. And I think in the world of finance, that's the number one element I wish people could adopt and understand, which is we can all choose to delay our gratification even just a little bit.
So it's just a matter of
Choosing to
patience.
sit upright. It's patience. In fact, I was watching one of your happy and healthy shows earlier that you have out on the web, and there was a woman who was talking about it was something in the woods, breathing in the woods, or I don't remember exactly the term she used. Okay, and she was saying, if we can just take every day and take a few minutes to just go out and breathe in deep and see what's around us, we will feel better in our lives. And
Yeah.
finance is kind of the same way.
Yeah, that was a forest bathing show.
Forest bathing, exactly.
Being an environment. Yes, I definitely I definitely understand that that the patience, if we
Mm-hmm.
can just be in the moment and just know what's coming up for us and just be patient, that definitely will give us greater wealth and
It, it,
just be
it
able
gives you
to make.
greater wealth,
So we're
exactly.
just gonna have to just take a short break,
Hmm.
and then I want to speak to you about tips for managing our finances during COVID and what we can do. And I think a lot of people might be interested in that.
Okay.
So we'll be right back. So stay tuned. Welcome back. I'm Nira Berry, the happiness coach, and your host of Happy and Healthy. And we're speaking with Jeff Smith, and we're speaking about different things that we can do to improve our financial situation and reduce our stress. So so Jeff, let's talk a little bit about what's going on in the world today. As far as we're in the middle of a pandemic, what are some tips that you can recommend for people to do just during this time?
Look, I think we have to recognize that the pandemic and COVID-19, first of all, the devastation in our country is just massive, right? I mean, the death and the sickness and the hospitals here in Montgomery County, our hospitals are nearly full. The ICUs are very close, and we're seeing numbers that we really have hardly seen since the beginning. And the sad news about this is it's affecting our population a very, very different way. Those who have privilege, those who are well-to-do, we're making it through this with really not a lot of problems. Maybe we can't travel. Maybe we can't see our children, our grandchildren the way we used to. Maybe we can't see our friends the way we used to. But when we start to look at, in particular, people of color, our indigenous populations, those on the lower income scale, and those living closer to the poverty line, this has been absolutely devastating. The job losses have been huge. Right. And although the government has been there to support many people with unemployment benefits, as we know through the political problems we've had, those have been worrisome. One of my clients that I work with through a volunteer organization has been really suffering through this as she's tried to work through her situation. She's what we call a gig worker, if you're familiar with that term. She's a musician. And she plays in different locations around the DC area. She plays music. She gives music lessons. She's 70 years old, and she's always made it fine through her life, right? She chose a path of of her happiness around music, drives her, not wealth as an example. That's always been important to her, but she's been able to make a living. Well, when all the locations close down and you no longer have gigs to do and all your ability to do lessons has disappeared, then you've got a real challenge on your hand. And so she's been completely reliant on the CARES Act as an example to get to the unemployment benefits and the health benefits. So recognizing that those challenges are absolutely huge, there's a couple of pieces of advice I'd like to share with people. The most important one I think we have to recognize is this is a short-term problem, not a long-term problem. We can see the light at the end of the tunnel. We know the vaccines are slowly being distributed. We're in the 1A group today, and within a week or two, we'll be moving down that scale and getting to 1B, and more of us are going to be able to get the vaccine. This is not a problem we're going to deal with in 5 to 7 to 10 years. So financially, what that means is make your choices for the short run. So for many people, if you need to increase your debt, use a credit card, for example, to buy your groceries, and you've been against debt your whole life, you hate it, it bothers you, it upsets you, this is not the time to do that. It's more important to eat. It's more important to pay your rent. It's more important to help those around you, even if you have to put yourself behind a little bit, because you'll have a chance to catch up. That's a really important point.
It is, because I know for many people that kind of goes against their grain,
Mhm.
and it's difficult for them, and that adds a lot of stress to their lives. So I think just hearing that from you, saying it's okay, allow
Mhm.
yourself to do this now, I think that's really helpful for them.
And as a corollary to that, it's okay to ask friends and family for help. Sometimes it's really hard to do that. We have this belief, I think, maybe it's part of the American view of bootstraps or whatnot, that we have to be able to do everything on our own. I've become a financially successful person in my life. It's not because of what I did, I mean, partly, but it's because all of those around me that helped enable me, my teachers, my instructors, my MBA program, all of these things that where I were able to meet mentors that guided me and helped me through the process, that got me to where I am. I wouldn't be here if it weren't for the help that I asked for. And this is a great time to ask for help. So I encourage people, look towards the county to support you. There's programs to help pay for your utilities if you can't afford to pay your heating bill. There's programs to help pay for prescription drugs if you can't afford to get the medicines you need. And if you need those, use those. We're a supportive county, and we count on people being able to do that. So looking to friends and family, looking to charitable organizations, to churches, to synagogues, to mosques, we have safety nets in place that are bigger and broader than our government, and this is a great time to use them. I do want to add just a minute for those of us that are a little bit more higher on the wealth scale, a higher income, and have been able to make it through the pandemic with our investments truly growing during maybe the worst economic period we've had in a lifetime. It's really important. And when you see the economy going through what it's going through, and you hear the bad news on the television set or on your phones, you maybe want to panic. And one of the most important things as an investor is never to panic. Never to panic. Have a plan, make a plan, and stick with a plan. If you're going to invest for the long run, meaning for retirement, keep it in retirement and don't make changes. If you're investing for the short run, you're saving for a car or a down payment, don't put it in the stock market. You don't have time to deal with the ups and downs. Be comfortable with a lower return that you can count on. And
So
if you do that, you're going to be safer.
it's really what your time frame is
Mhm.
for what your goal is, right?
Yeah, I tell people all the time the most important question get asked this all the time: what should I invest in? What's the next best stock to buy? People always want to know the best thing to do. And I tell people the same answer all the time. The decision on how to invest your money matters mostly on when you need your money. If you need your money in the short run, then keep it safe. If you can afford to invest your money for the long run, then take risk. Because over the long run, those risks tend to be mitigated with the growth of our economy. The American economy has grown pretty successfully for 80 years. Will it grow for the next 80? I don't know. These are unpredictable things, but we have reason to think it probably will. So yeah, that is probably the most important advice for COVID for both those who are well-to-do and those who are really struggling. But I definitely feel for those people who are challenged, and to just hang in there. It's going to get better.
Yeah, well, that's good to know. Yeah, that it
Mhm.
will get better. I
It
mean,
will
it
get
has
better.
been, right? It's
Yes.
always good to be hopeful and be optimistic.
Mhm.
I just also wanted to go over what a few of misconceptions that, for a lot of people, this is like an area of their life where they just don't want to face it, or they don't really understand, what the best way to go about it. And speaking to you prior, you mentioned about student loan
Mhm,
repayment, and
mhm.
can you go over that and maybe a few other
Sure.
misconceptions?
Yeah. So one of the big misconceptions that I think people have has to do with debt and loans and owing money. And there's really two kinds of debt. There's what I call good debt and bad debt, right? Good debt is when we're using somebody else's money, a bank, as an example, who lends us money for a car or for a house or for a student loan, in order to be able to purchase something, an education, a car, a house, for a long period of time. That's good debt because we're using somebody else's money to grow our personal wealth. Education's the best example because somebody who's going to get a college degree is more likely to earn a higher salary over their lifetime than somebody who only has a high school diploma. So if you have to pay for college, and that's your situation, we have one of the best community colleges in the country here in Montgomery County. I can't tell you how many times I've encouraged people to go to Montgomery College. It's reasonably priced, and then worry about the next 2 years and find a school. But if you need to have debt for education, it's probably worth it because you're going to get paid more over your lifetime. And therefore, paying down that debt ought to be done over a lifetime because you're going to have a lifetime of increased earnings. Don't overpay your debt and hope to save later. This is the number one mistake people make.
Yeah, I know. Just about everybody I know feels like they have to pay their student debt up first.
Correct.
They really want to get it out of the way, and that way not worry about it, which seems reasonable to me. And so I was really surprised at your answer.
Yeah, it's reasonable. But what we've learned over years of finance is the best thing that we can do to grow our personal wealth is to use a concept in finance called compound interest. And simply put, this is the interest you earn or the earnings you earn from your investments that can earn interest. So if I put $100 in an account and it earns 10%, I have $110. That next year, if I leave it in there, I don't get $10 of interest, I get $11 of interest. And that compounding growth makes a huge difference over a long period of time, enormous difference. So, what I tell everybody who's facing a debt situation is you have to do both at the same time. You have to pay your debt and you have to save. And if you can do both, and you usually can, then you'll find at the end you have more money available. I take my clients, I can think of one person in particular, Joe. He's right now in his late 60s. We started working together when he was in his early 50s, and he was buying a house and he had money set aside to buy the house. And I encouraged him to get a mortgage instead of paying for the house in cash. And we discussed the whole difference. Well, today, Joe had about $300,000 of wealth when he was 50. Today at 68, Joe has $1.5 million of wealth and he owns a home. Now he's paying the mortgage, but because that 300,000 could be invested and he could pay the mortgage off over time and let his money grow, his wealth grew. And that wouldn't have happened if he didn't have that $300,000 to invest. So you have to do both. You have to invest and you have to pay down the debts that you have at the same time.
Okay, well, that's really good information. And so, if somebody wanted just to find out how to reach you, can you give us your website?
Sure. It's it's brightlinefinancial.com. You'll find it at www.brightlinefinancial.com. We've got information there with calculators and tools to help people understand these complicated elements. And we're happy to answer questions. If anybody has any, you can send us an email right from there, and we'll get back to you really quick.
Okay, and just what is like maybe some parting words of wisdom, like if you had like one or two things to make sure that people did, like just try to get it in their heads,
Yes.
what would that be?
I think the first word of wisdom I would say is look for professional help. I mean, granted, I'm a professional, and I certainly don't want to help everybody. I have my clients, and we don't need to help everybody, but look towards professionals because it's a complicated industry, and there are lots of professionals in this industry to help guide you, and the vast majority of them are great, honest people. So take your time, get a recommendation from a friend, and look for someone to get you some help in managing finance.
Okay, and as far as like for yourself personally, what was the one thing that you did right?
That's a. So I think for the one thing I did right is a funny thought I have is when I got my MBA back in 1991 at University of Connecticut, I took a class in personal finance, which ended up being my career. And I made a plan for myself. I had to do it in Lotus 123 for all of you old people like me that existed before Excel. And I had to write my own financial plan because they didn't exist yet in software.
Oh, so writing a plan. So
So to this
having a
day,
plan. And I
I
think
still
that,
look at that plan.
yeah.
Exactly.
And I,
That's the most important thing.
yeah, and I think that goes across every aspect
Mhm.
of your life. If you're a
Yes.
plan, that really makes it great, and that's wonderful. So thank you so much, Jeff. We're running short on time, and I really appreciate you being with me here today and giving us all this wonderful advice and information and what we can
Mm.
do. So I really appreciate it, and so we're going to continue with our show. So stay tuned for our next segment of Good to Know, where I've always got something good to share with you. So stay tuned.
If doctors, nurses, and grocery store clerks can wear a mask for 10 or 12-hour shifts, you can wear a mask for an hour or less when you go to the store. Do your part. Mask up, America.
Welcome. I'm Nira Berry, your host of Happy and Healthy. And now it's time for Good to Know. And as a life coach and happiness coach, I've always got something good to share with you. So today, I'll share with you some coping ideas that can help you deal with stressing over money issues, because a lot of us are doing that now, especially since the pandemic hit, which can cause us many sleepless nights, raise blood pressure, and many other ailments that just come with stress in general. I read a study recently where it found that 69% of adults reported having financial worries. That's a huge amount. So, in tough situations, I recommend to my coaching clients to acknowledge what you're going through. We often just plow through our day and don't realize how it's affecting us. How are we acting towards others? Like, are we being rushed, or are we being extra mean or irritated? So, take a minute and think about this. Like, how are we going through our life, not just through the world? So, take a minute and just breathe. Sometimes we get paralyzed because we don't know what to do. So we reach out to an expert, and I really always recommend to do this. Or maybe you could even reach out for a mentor. Like, even if you can just find somebody in your neighborhood, or maybe somebody that you know. It doesn't even have to be someone that you know very well, just someone who you know is trustworthy. And they can help you with what next steps to take. And this way, you know that when you're taking the next steps, that you're already feeling better because you're doing something, you're moving your world forward. And I know that that's always a really good feeling, rather than to feeling like you're stuck in some kind of a rut. And another suggestion is to remember to take care of yourself and your needs, especially now when you need it the most. This is when people very often just drop things that they normally do, like exercise or eating well. So think about these things to maybe beef it up a little bit, and to really take the time to exercise, even if you just push yourself out the door and walk every day. So, and another aspect of what you could be doing is just do something, even for a few minutes, that sparks joy within you. And I know that's like a term that you hear, like, oh, what does spark joy mean? Well, just something that, will just, you'll focus on it, whether or not you're meditating, or whether or not you're even just petting your dog, or maybe even like really focusing on playing with your child for a few minutes. And I recommend doing this first thing in the morning, because then it really sets your whole day up and being in a positive way. So these are just a few suggestions among many others. So for more ideas, or if you want to just let me know how it worked for you, feel free to contact me, Nira Berry, the happiness coach, at info@NiraBerry.com. So thanks for watching Happy and Healthy. I'm Nira Berry, your host, and I hope you have a happy day.